Right, good afternoon, everybody. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure. Position disclosure, no new swings for me. A little bit lighter in UNG than I was 2 days ago, but still in that. But nothing new there. Okay, got some earnings out, sounds like. Take a look real quick. Scan through these numbers. Looked like Intuit was a beat. Not really moving. Autodesk looks like kind of a miss / in line. Moved down at first, but kind of flat. Booking looks like beat. Autodesk looks like bad guidance. That probably should be down more. Warner Brothers, that's a big loss. That's a miss on subscribers. Miss. Is that going to be down? Down at first, not too much. Big C. This thing was so... This was like the next Shopify when this IPO'd. Turned into really nothing. Not really moving. Nothing there. That thing was like going to be the next Shopify when that IPO'd during the COVID days, but that's when everything went up, and you could pretty much buy anything and everything. Beyond Meat looks like a miss. Their guidance, I don't know, 375 to 415, 380s. Guidance kind of in line. Not great, but up on that. Square looks like all over the place down right now. B missed on revenue, no guidance yet. Doesn't look great. Doesn't look great. This company, I don't know if this is, I don't know. It's a financial tech company. It's kind of like a crypto company. Maybe it's not a crypto company. They have crypto holdings. Do they still have crypto holdings? I'm honestly not sure. I don't know. I liked it when it was Square. Alright, so let's talk about the markets. What's happened, what's to expect going forward. So crazy day today. Once again, crazy day every single day. I say that every day because every day is crazy. It is what it is these days. So coming into this morning, we were gapping up a bit, pretty much all on NVIDIA. A lot of things were gapping up, but seemed NVIDIA was kind of trying to save the market, and this thing actually traded pretty well and closed pretty well today overall. But huge gap up on a pretty decent report from NVIDIA. Definitely wasn't a bad report. So market was gapping up this morning, leaving us in a bit of a tricky spot where yesterday, after the close yesterday, it was the fairly same game plan as after the close on Monday, which was hope for a gap down, hope for a weak day. It's pretty much the game plan was most likely what's going to happen is we're going to chop 400, but hopefully we go down even more and get kind of real extreme extension. We can look for a bigger snapback. And we kind of got that. Didn't really quite get to that $10 plus area though yesterday. Doji day yesterday was and so yesterday same thing really, hoping for a gap down. We're oversold, overextended a little bit, but we can get worse before this gets better, so let's hope it gets worse before it gets better, because that's where we have more of an edge. So that was the game plan after the close yesterday. Today we're gapping up because of NVIDIA, leaving us in a tricky spot where we're not really overcooked anymore. That short-term tactical sentiment's not in that green zone anymore, which we really like. And that was after the close yesterday, so a gap down this morning would have been different, but gap up this morning, definitely not really overcooked anymore. At the same time, ADMA's up at 404, 405. We're opening up under 402. There's still room higher. Bears can't really let us get above, honestly, arguably like 408. was the real breakdown level here. As much as this is an important day and bears don't want to lose 404, these moving averages are still up here, and always respect equilibrium, always respect these moving averages. One thing for sure, in the entire history of the stock market, we have always corrected to equilibrium. Always. It's a fact. As much as it's not a fact and there's no facts in the market, that's one thing I like to say because it's true and it helps me with conviction. And it's true. I mean, it's never not happened. So, going to keep going with that for now. So with that being said, Bears don't want to get us above 404. This is a day to take notice of, but with these moving averages up here, there's still room higher. 408 was the real breakdown level we broke down from. So the gap up this morning is a bit tricky, where we have some room higher. We pretty much have room higher and lower. It's more 50-50-ish. The edge arguably is still higher because we have room up to the ADMA. We're not at the ADMA. But just kind of a weird, tricky morning. So how does the day progress? So we open with a gap up. I mean, it was all over the place. Open with a gap up, sell off, get bid back up, and then end up giving a big move down. What triggers this big move down? Same thing that triggered it yesterday, UUP. So SPY opened, went down, then went up, and then went down in a big way. UUP pretty much did the exact opposite. Opened, went up, broke the morning lows, held this kind of level from yesterday. It's like 28, this is 28.20-ish, right? Yeah, you can see this bumped into this area yesterday, got through it yesterday, same level getting tested today. Literally the exact opposite of SPY. And then this goes on a run holding this trend, which ends up being like a 2-day, day-and-a-half trend or so. So the same problem, that was the main problem for the market yesterday. Despite this VIX, and I'll talk about the VIX in a minute, not doing too much, and it wasn't doing too much in the morning. The UUP just trended up all day yesterday. It was relentless. It was the same thing the first half of the day today. And you also had the VIX getting bid back up as well today. So just, yeah, VIX up, dollar up. Can't be fighting the market with that. At least just on the way, right? You can pick your certain spots. So we get that for half the day. And what ends up happening? So when the market is at lows, and now I'll talk about the VIX and the positive divergence that we might be seeing, which I titled this video VVIX positive divergence question mark, because that's what's happening right now. So we talked about this many times. It's a great sign for both ways. It might be happening right now. This might end up not working out in a week or so. We'll see. But this is what's happening right now. So when the market's making lows today, S&P is, the futures up below 4,000. We lost yesterday's low. Out of curiosity, IWM looks like barely lost it, and the Q's also barely lost it. When the market, the S&P, is making day lows today and is below yesterday's low, let's take a look at where the VIX and the VVIX are. You would think that when the market is going straight down from day highs to day lows and breaking yesterday's low and looking disgusting and trading just terribly, that VIX would be kind of sky high. And where is the VIX at that point? Around whenever that was, like noon today. VIX is in the mid-22s, which is like not even halfway through yesterday's action. Here's the VIX daily candle. That wick, this little wick, is the high of the VIX today. Gigantic divergence there, not even remotely close to yesterday's open, let alone yesterday's high, even though the S&P made a new low. And the VVIX, which I talked about this on Monday because it already started happening on Monday. Now it's happening even further, this positive divergence. VVIX, same thing, didn't even break yesterday's close. Just not even, like, look at that red candle, just not even close to yesterday's close, let alone yesterday's higher open, straight down today. So if you're seeing this, which is what some of us saw today, we were looking for some counter trend trades. I definitely did not think about this type of bounce was going to happen, but it can happen. It has happened more often than not. Not necessarily bounces, just the wide ranges in the market. But we were looking for counter trend trades down at these lows for these exact reasons. Just we're breaking yesterday's lows, and the VIX market again is not confirming it. The UUP is really the only thing. This is above yesterday's high, trending higher, but the VIX market is not confirming the market move. So that's what was happening at day lows today. Then we end up reversing, and then we get whatever the zero DTE cycle where one thing leads to another, where we go down and people are long puts, and then they start closing their puts because we stop going down, and then more people close their puts, and it just becomes a feedback cycle of selling to a feedback cycle of buying, I guess, if you will. Is why people argue the market moves the way it does these days intraday, the whole zero DTE thing. But that's besides the point. So I'll finish off with one, just, I want to talk about again, like, what a trade. I want to go just back to the roots of what a trade is and how you can be okay on days like today, as crazy as it is. And then again, just to cap off, so what's happening with the VVIX? I'm not saying the market's definitely going to hold 4,000, and 4,000 is support, and you should be buying 4,000, but that's kind of what it's looking like right now. We'll see. So I think what's going to happen going forward is pretty much one of two things. Either we're going to hold 4,000 or we're not. If we're going to hold 4,000, here's the SPX. If we're going to hold 4,000, which this is holding 4,000. Like, I know we're trading below it. We've traded below it, but every time we go below it, it's getting bought up. So that's what that means. To me, it's not a perfect just 4,000 hold. If we're going to end up holding 4,000, we should eventually move back to 4,100, 4,200, and possibly make a higher high. If we're not going to hold 4,000, we most likely should not get above 4,100 at all, and this should lead to at least 3,900, if not into the 3,800s. That's probably what should happen. And right now the VIX market is saying it's more likely that 4,000 is going to hold. It's a very similar playbook to what happened back for the big low, and then similar but different to what might end up happening for the 3,800 hold. The big low was in October. This was the big daily divergence in the VVIX, where the VVIX topped out like over a week before the market, and then when the S&P actually made its real low in October, the VVIX made a big lower high on the daily. So that's like a first early sign. That's just what happened again. That I already talked about that on Monday, because that's what happened on Monday. The market is making lower lows, and this VVIX is not confirming with higher highs. So then what happened, we'll see if something similar happens now with 4,000, similar to what happened with 3,800. So 3,800 was after the big low or whatever, up to this trend line, coming back down, and it's similar but different, really, but it's just a different level, where it was 3,800. We're all wondering, is this going to hold? Is 3,800 going to hold? It looks like it's not going to hold. If it doesn't hold, we're probably going back to 3,700, if not maybe the year lows, right? That was like, it really looked like that might happen over here. And what was happening over in the VIX market was positive divergence. So the S&P made its actual low on December 22nd, and then it broke higher in early January 6th. The VVIX on December 22nd is when it topped out. So this made its high the same day that the S&P actually made its low. But even that day, I remember that day, because the VVIX, the market was very shaky and didn't make its low right away, but the VVIX made its high like literally off the open. And then I think sometime in the morning, the VVIX made a lower high intraday while the market made a lower low. positive divergence, and that's when that actual low was. And then when the market ended up actually breaking up over 3,800 on its way to 4,000, was over through here. And we'll see if something similar but different happens over here, where while this looks bad, the VVIX, like, it's down here back at lower levels, it's trending down, and this is when the S&P pretty much looked the same thing. Like, it looked bad, it was under the moving averages. Was 3,800 going to hold? Maybe yes, maybe no. We kept trading below it, but it kept getting bought back up. And if you were only looking at the S&P, it looked really bad. But if you were looking at this, this should be up here, and if not even trending higher, if that was going to really lose 3,800 and go back to the year lows. So we'll see. The positive divergence is real right now, and it's hinting that 4,000 might hold. It doesn't mean that we're going to new highs tomorrow again. I think if it's going to hold, this is going to play out in a week or two. And if it doesn't hold, then in a week or two, we're not going to get above 4,100 at all. And if that's the, so like what will happen then is we won't get above 4,100. This stuff will cool off, and then this will be at risk of bouncing again. And that's when we might actually break down 4,000. And then the bullish side is we just keep chopping 4,000 while this cools off, and it looks bad, but these just keep trending lower and we break higher. So that's what I think is going to happen going forward. Obviously, I don't think it's necessarily one thing. It's just, it's always if this happens, then that, if that, then this. And then just for trading today, to cap that off in general, just to revisit like roots to trade. It's something I tell myself every day. I remind myself of it every day, multiple times a day, when I do well as when I make mistakes, especially. But just when you guys are trading, to, whoever you are, whatever type of trader you are, whatever type of trade you're doing, it doesn't really matter. When you're putting a trade on, you basically, it's, you need your entry, your out, then your reason, right? You need your entry. What I think you really need is you need your entry, your reason why, and then why is your trade going to go good, and what are you doing if it does, and then what are you doing if it goes poorly. And that's all you really need. And then you use things like levels, respecting your levels on top of that. So, for example, today, what ended up happening, it's big ranges, but it comes down to knowing and respecting your levels. And this afternoon rip was pretty vicious, but it occurred after we reclaimed 398.50 right here, which we've been talking about for days now. 398.50 is 4,000 on the futures. Know and respect your levels. It's one thing, if you're short and below 4,000, that's one thing, but when you're back above 4,000, the short is much harder. So, excuse me, and that's different than this morning. So, like, say you're shorting this morning because we're gapping up, and you have a common gap that helps your edge. Common gaps usually get filled. You have the gap edge for you. And you think that in the bigger picture, this market is going lower, 4,000 is not holding, and you're trying to get a good short entry. This rolls over. That's fine. You got your execution, the gap up, whatever. Then you find your execution, you find your signals on the intraday, whatever. You respect your levels. You have your reasoning. Then you got to have your targets too. You got to have your outs. You got to know what are you doing if it's going poorly. So that doesn't, sometimes I'll do like extension trades where I don't necessarily have an out, but the game plan, I know it's going to the 15-minute ADMA at some point. I have a game plan where if it gets worse, I can build in blah, blah, blah. That's part of the game plan. But you got to have like your reasons for your trade. And then you got to know where your expectations are too, like where it's going or where it could possibly go. And that helps you either take things off when you should, or helps you try to really hang on to it and trail and be a little bit looser with trailing, because although it might be annoying to had something be up in the money $3 that day and then give half of that back, you know that in a week that could be up $10, and you'd rather just ride that ride than have to try and get in and out every single day. So the point of what I'm saying all this is, as crazy as these ranges are and as crazy as these days are, it's not that crazy if you have your reasoning and you know your levels. So like this afternoon, back above 4,000, it's hard to short. Above 4,000 coming down, you can look for your longs. Below 4,000, it's hard to be long without extension. When we're looking for these count, and then I guess the point of this too was so we were looking for counter trend longs down here, at least I was. But the reason for my trade was extension. I'm not necessarily buying here thinking this is going to happen. I'm buying here saying we're extended on the 5-minute, we're extended on the 15-minute, we're extended on the 30-minute. It's important. I guess another point I want to make too is know where you think you can go is important, and where you've come from is important as well. So although we might continue down here at, like, we're extended on every time frame, the 5, the 15, the 30, the daily as well, including the daily. It's one thing if you're extended on those intraday time frames, but you're like upside extended on the daily. That's not the same as also being downside extended on the daily. That just adds to your conviction for a possible snapback on the 5 or 15-minute chart. But so you're looking for that snapback. You get it, but then knowing where you are on the daily chart, you have room on the daily chart. That adds conviction to being able to stick with it, and not get shaken out around here. And then just, you never know what you can. I mean, this never really stops you out. You're hanging on. And this last point right here at 39.50, once this gets back above it, you're back above the level. You're back above 4,000. It's hard to look for shorts, and you can even flip and look for longs. It's not easy to flip like that, but it's a crazy market. So going, just like keeping those roots in your brain when you're executing and getting in a new trade. I try and do it every single time. It's just so important. Like, if you don't have those good reasonings and you don't have that good, okay, I think this is a good entry point because of this. I think it's going to go here in my favor because of this, this, and this. And if I'm wrong, but I don't think I'm going to be wrong, this is what I'm going to do. Either add and build in, or get out, or something like that. And usually, and again, it's not that, usually once you have all that and like you really start to figure this stuff out, and you're getting like the flow of the money, and you're watching the VIX and the dollar, and you're getting how everything's moving. Honestly, usually when you're wrong, more often than not, it's not that you're wrong, it's just that things change, which that's what happens in the market. But that's fine. It's just, it happens. And that's like important to understand. So you could be buying 4,000 here and come back in a month, and we might be at 3,800 and we might be at 4,200. And I could be giving you 10 reasons why we're going to be at 4,200 because of the VIX divergence. And I could be giving you 10 reasons why we're going to be at 3,800 because of everything that's deteriorating around us, basically. But the point is, whatever ends up happening in that month where you go away, things are going to change. So it's not really just you were wrong or you were right, but something probably changed. We get data every day, every week, things change. So you get your good reasonings for why your trade's going to work. You get your good execution area of why that's a good place to execute. And because of that place of execution, you're risking X to make more than X. It's possible. And again, it's just as simple as, okay, this is gone. And that was the thing with the low today too. That was actually the point I wanted to make, and I forgot to make it too. You're extended on every time frame at the low of the day here, and it's not only that, but look at what we just did. We pretty much, besides this little bounce, we pretty much just came straight down from 401 to 396. So that's where I'm saying you're extended on every time frame. You just came down straight, whatever, $5, $4 or $5. The next dollar is probably up, not down. You got your extension, everything. Like, this is when the stars align. Like, I love this long today. But I did not think this was going to happen. I did think we were going to get a 15-minute bounce at some point. But, like, that's the point of, it's important to know where you think you're going, and it's also important to understand where you've come from. So as much as we might go down all day, we just came from pretty much $5 straight down, extended on every time frame, from the 30 to the 15 to the 5 to the 2 to the whatever. That's when you start saying, okay, the next dollar is up, not down. And if the next dollar is down, aka you're further extended, the probabilities of the next dollar being up, not down, are even greater. And that's, when I would be like sizing in even more, and that's when, I don't have an out. That's that point. That's that type of trade. I know I'm going in circles a little bit here, but so again, like, having your reasoning for why your entry's good, having your reasoning for why your trade's gonna go well, and then just knowing what you're gonna do if it goes wrong. And again, more often than not, it's not that you were wrong. It's just things change. You know, this could have just gone this easy, like this bounce. What ended up happening today, I know for a fact this was going to hit the 15-minute ADMA at some point today. But this very easily could have bounced half of this bounce, which is still a bounce, and probably would have been more than $1. That easily could have bounced half of that bounce, and the VIX, just went sideways and then could have kept going up. Then the dollar could have just gone sideways and then kept going up. But things change. So if you think, we're just going to go straight down all day and not rally like we rallied, and the UUP and the VIX just kept doing what they were doing, then you would have been right. But things change, and the VIX rolled all the way over, like literally all the way over, and has been diverging on the daily, and the dollar rolled all the way over. So it's not necessarily like, don't look at it that you're wrong or your idea is wrong, which I guess like it is. But usually when you really start to understand things, and like what a good trade is, I guess, and like when your risk reward and probabilities are in your favor, and you still end up being wrong, you're usually wrong because things change, which that sucks and it's annoying, but like, I don't know, it happens. So that's my rant for today. But just these days are crazy, and I know like people get hurt on these days, but it's just, I don't know, like I think the shorting this afternoon was kind of hard after we reclaimed 4,000. If you're shorting this afternoon and you have a bigger picture short versus like 4,100 or something, and your bigger picture trade is a macro thing, and you explain to me all the reasons of why you're short in this 44,000 to 4,100 area, and you're risking 100 S&P points to possibly make 200, 300, 400 because you think we're going to New Year lows, then that's fine. I mean, you got good risk reward, and your reasoning for your trade and everything, like that's fine. But if you're doing stuff like in the middle of the day and you guys like keep having trouble, like go back and ask yourself, like, if you really had all those pieces to the puzzle before you got in the trade, and if you didn't, then make sure you do next time. Where you're entering, why is it good? Where you're gonna tell yourself you're wrong, why is that good? Sometimes that's not necessarily just the last 5-minute bar low. Sometimes it's the previous day low, or sometimes it's only if, you know, the VIX makes a new day high or something like that. Um, and yeah, and it, you know, take those trades. And then again, usually when you end up being wrong, it's because things change, and that's also how you. Because I also try so hard to help you guys as well as myself avoid shakeouts, because I hate it. I hate them. Happens all the time. But you know, when you lose money, but you end up being right, like you want to avoid that. Like you want to capitalize on your ideas. They're good ideas. You know you should be capitalizing on them. That's why you're here. That's why you're doing this. So how do you capitalize on your good ideas, but not get shaken out, but still have good risk reward and everything like that, right? So it's all figuring that out. So yeah, that's my rant for today. Yeah, just make sure you guys think of all that when you're entering trades and everything. You gotta avoid. I've said it before, but half the battle, honestly, making money is like the easier half of trading. It's not losing money, that's the harder half, and you gotta avoid those stupid. I only say stupid because that's what I call them when I do them, which I do them all the time. But you gotta avoid those stupid trades where you just like lose money. You're gonna lose money, but you want to make sure you lose money on a good idea that ends up not working because things changed. Um, you know, so like if you're buying 4,000 and you think this VIX divergence is gonna work out, and then in a week or 2 weeks the VIX has gone straight down and the market still hasn't gone anywhere, that's when that 4,000 idea is gonna change, and it's gonna be like, okay, well, the VIX has gone, you know, the VIX was diverging, but now the VIX just went straight down and the market hasn't gone anywhere. You know, things have changed. The probabilities of that are not looking as good. So yeah, I conclude. Happy to answer any questions or comments or concerns or complaints that you guys got. I'm gonna start with YouTube. Give YouTube the first go. Sebastian, what do you think of buying the inside 5 on the Qs at 9:45? Still a little extended on the 5-minute. 2-minute was there. And the video was pretty strong off the open. I like it, Sebastian. I like it. Yeah, I like it. It just, and I don't know if you were able to get risk covered on that. Maybe you could have tried to cheat. I know the 5-minute ADMA hadn't caught up yet, but the Nvidia was looking good. VIX was breaking lows. If this ended up working out, this probably would have flagged up here, and the 5-minute ADMA would have caught up more through time. I like it. Ended up failing because the market ended up failing, and the dollar, the dollar looked scary. Like, it's literally the exact opposite. Market looks scary, then it looks good, and then it's, rolls over. And the dollar was pretty much the opposite. Dollar looks good, then it looks scary and rolls over, but then comes back and makes new day highs and kills everything. So yeah, I like the trade, Sebastian. And you had everything going for you, and then 10 minutes later you didn't have everything going for you, which is how it goes in this market. But yeah, I like the trade. Hey Pat, how often do you use market orders? Also, do you use hotkeys for every single one of your orders? More often than not use hotkeys, yeah. Sometimes I'll put a stop in the order entry window because for no reason. I don't know. But for the most part, yeah, I use my hotkeys. And for I don't use like buy stop. I guess a buy stop is a market order, so that counts. I don't just I don't want to say never, but I pretty much never like sit there and hit market buy. Um, but I do market buy when I buy stop or buy back up through a level, which sometimes I don't necessarily put a buy stop in because I don't want it to trigger me on a bad print. So I'll kind of have a buy stop in my mind and watch the tape and have my finger over F1 or whatever. And, if the tape looks like I want it to, then buy back through the level or something like that. But so not too often, but if you include buy stops and like buying up through levels and stuff, then I don't know, a decent amount. And yeah, I mostly use hotkeys, but do whatever you're comfortable with. Um, I'm not a hater of the order entry box. If you are trying to fast scalp 10 cents at a time, you can't use the order entry box. But if you're not trying to do that, then I think it's fine. You don't have to be, I'm not a hater of it. But again, if you're like being super, super tight and like you're buying in versus 10 cents low and you got to get it in real quick and blah, 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 like super fast like that, then you can't use the order entry box. But other than that, it's fine. Do I have an exact date of when we break down? Not yet, Mike. I'll let you know though. Josh might. He's got the orb. False breakout, false breakdown are the best plays in the market. Yeah. I mean, that's how levels hold. Again, like, it's not a perfect, 4,000 is just the low. It's, we keep. Because, again, know where things have come from and then know where they could/should go. And that's part of how you analyze your risk reward. If you don't know that, honestly, I don't know how you even are analyzing your risk reward. But so, like, the S&P breaking 4,000 is a big deal. But the market is very unperfect, so it doesn't mean the first time we trade down through 4,000 we're going down to 3,900. But that's what should, if we really lose 4,000, we should go to at least 3,900. So that's why we're now in the process of possibly holding 4,000, aka not really. I think the low in the futures today, which if you look at the SPY daily candle, it's kind of ugly. But if you look at the futures, I hope this works. My computer is usually a little slow during these meetings. The futures daily candle, it's a bit better. Are we that far off highs? I guess a little bit, yeah. But the futures candle is a little bit better. And as you can see, as bad as this looks, it looked bad back here too, and we did lose 3,800 a little bit, but not really. And that's kind of what's happening now. We're poking 4,000, but the low today was 3,975. That shouldn't be your target on a real 4,000 break. This real 4,000 break should be at least 3,900 and then maybe into the 3,800s. So yeah, it's either going to be a 4,000 break and down to 3,900, or it's going to be a messy 4,000 hold similar to over here, where we end up kind of breaking back up towards highs over here. And if we do end up breaking down. Oh yeah, that's another one where this SPY candle on the daily doesn't look so bad, but that's because half of this candle happened pre-market. I forget what the data was this morning. But so the SPY candle from February 21st is this on the futures, which is like literally double the size. Basically the high is 4,100, which was roughly the high of 217, which is up here, right? Yeah. So that's 408. So if we can, bigger picture for now, as long as SPY is below 408, there's a chance of a bigger breakdown. And also as long as we're kind of above today's low, there's a chance this holds. This rant was recorded on YouTube, yes. What are your criteria for initial position sizing? Yeah, good question. Definitely depends on the type of trade. Um, it's more dollar amount than size. The size comes with the dollar amount that you want to risk and possibly make. And again, that's the type of trade. So, like, the SPY 15-minute extension buy today is not something that you should try to make your month with on this trade. This is lunch money stuff. Um, right. Versus, again, if you're getting into like a real swing trade versus a real big base level or something, and you know your fundamentals and you really like the name, that's where you should have more conviction and you should be risking more money to try and make more money. So I don't know if that helps too much, Rich, but it's the sizing comes from the dollar amounts that you want to risk and potentially make, as well as the space, the space risk and everything like that. Do I incorporate beta with portfolio management? I guess in my head I do. I don't actually incorporate beta. I'm aware of what beta is though, but that's just what I mean with like knowing what you're in and knowing what you trade. Um, if you're long, if you're long tech and you're watching the Qs as a gauge, but you're long Nvidia and Tesla and Snow and D-Dog and you're long, crazy tech names, then expect yourself to be up or down more or less than the market is usually for the most part. But so I guess yes I do, not specifically, but that's what I mean when know what you're trading, know how it can move, know how many points it can or can't move, and then from there figure out how to size. With Nvidia at 1145, inside 15 at 80 May for long idea, looking market counter trend long, like the idea, decent space. I know, and a name like Nvidia is unavoidable. Yep. Yeah, just size correctly though. Nvidia is not a type of name to try and risk 10 cents to make 25 to 50 cents. It's a name you want to risk a point in to make 2, 3, 4, 5 plus points. Anyway, inside 15. Very nice. So for YouTube or whatever, Kyle's asking about the inside 5 at 1155 for that idea. Honestly, as much as I would like to say yes, and this worked here, I would rather tell you no, because it's the same reason why you need to be careful about getting stopped on the new SPY 5-minute low today. You are trading Nvidia at a time of the day where you should be using the 15-minute chart, and you're using the 15-minute chart, and you're using information from the 15. And definitely at this point, the 5, as much as the 5 does matter and every time frame matters, it's not that important. The 15, 30, and daily are much more important. Um, so, so as yes, it is a valid way, but honestly, not really no, because you're trading a 15-minute idea. So trade it like that. Take less size and give it the right risk. You're gonna make less money, but it's better to make less money and do I'm trying to think how to say it, but it's better to trade more and make less more frequently than it is to like try and have one big home run trade or something. I think it seems a little counterintuitive, but I know statistically that's actually the right way to do it. So I say that the 5 minute thing isn't valid, even though it is valid here, because as much as this worked here, there are gonna be times where this pokes this low and then works. Honestly, the way the market trades these days, more often than not, it's gonna do that. So I'm gonna say no, and I'm gonna tell you to trade your 15-minute idea with the 15-minute out, because I think over time, 9 out of 10, 90 out of 100 times, whatever, you'll end up not getting shaken out, and the math will be better for you in the long run, versus if you're using 5 minute risk on a 15-minute idea, you're really risking getting shaken out on an idea that, if it's very possible to get shaken out on that. And it's the same thing why the low in SPY today, like, you're looking for a 15-30 minute bounce, you don't get it. This low happens here, but that you're not getting the 15-minute pivot here. I wish I could like go back and play a video of how these candles were forming over real time, but if you're playing a 15-minute, 30-minute pivot, don't use a 5 minute out as much as you want to, because this made a new low here, but it didn't. The 15-minute trade that you're looking for, that is going to happen, it's going to touch the 15-minute ADMA at some point. That didn't happen yet, so there's no reason to get out because that hasn't happened yet. And if you have your game plan built in to add more lower, this and that, then you're okay. But it's the same reason why it'll help you stick with those extension trades and not get shaken out on a 5 minute time, because I swear I see it like more often than not. The 5 minute chart gets shaken out on 15-minute, 30-minute bounce trades or pullbacks or whatever. But that's where the bigger money is, the bigger movements. The way to make big money is to have as much size as possible for as big of a move as possible. That's going to be impossible to do in a perfect world, because this is an imperfect world. But it's better to have a 15-minute bounce than a 5-minute bounce. So that's how you stick with it. So yeah, I hope that makes sense, Kyle. But as much as I see that 5 minute one working, I guarantee you there's going to be another day where you tell me that exact same trade and you're going to say, I got stopped out on the inside 5, and then it worked. How could I have avoided that? And I would have said, oh, what does the 15-minute chart look like? And then I would have said, oh, look at the 15-minute chart. It's 12:30 in the day. This is what you should be using and going off of. And if you use that, you would have never gotten shaken out. So that's my answer for you, Kyle. If you're trading the bigger time frame and it's a bigger time frame idea, then stick with that. When you're messing everything up when you start to bring the 5 minute stuff in, because that's not the basis of your trade. You're changing the trade when you do that. So yeah. Josh said his order broke today. That is not good. Looks like my career is over now without that. For these bottom SPY trades like today, do you ever buy up after you are more comfortable with move? After it broke 398, after 2 p.m. Personally, I don't, but I'm bad at chasing, and I'm not the best at. I'm bad at chasing. I always say that. I need to get better at it. I want to be the perfect trader, obviously, but I just no. Honestly, my answer is no. That doesn't mean you shouldn't. And I like the idea of seeing this bull flag at in the mid 398s at this, because this is a major level. I like this bull flag and buying this bull flag up. I like this trade. This is a great trade. Into mid 398s, into 4,000, stops where it should, bull flags, goes up through it. That's a fantastic trade. So I like that. And on it, I'm trying to be better about doing that. I'm trying to be better about doing that. But for me, just not, more often than not, I will already be in from the downside extension and will just be trailing a piece, um, which I could have been today. I didn't. That's my own fault. But I still stuck with my game plan. I was looking for a 15-ish minute bounce. I got it. I took it all off. Um, Definitely didn't need to. There was no reason to always. And the reason, so this, like, you don't have to, know where, again, know where you think something can go and have, like, your, good reasons for that. This isn't going to always happen, but knowing where we are on the daily chart and knowing that the daily ADMA is at 405 and SPY is at 396, or whatever, 404, it's like $8 an extension. There's room, and this could happen, which that is a reason that helps you hold on days like today. Um, yeah, but that's not always going to happen. But nowhere you could go, nowhere you could go. You usually find that from daily charts and weekly charts. So personally, yeah, Mike, not always. I'm trying to be better about it. I like this trade a lot, though. It's not as much as it's just a 5-minute bull flag. It's at a major level. So I like that there, but not always. Follow up question. I took half full size. Wait, no. Follow up question. I took a full size at 1 p.m. and was watching every tick and was happy to exit green before the 2 p.m. real move, but that's my fear of losing. Yeah, you are risking too much. If you're that uncomfortable, and this goes for myself and everyone too, but like, if you're that uncomfortable, then you have too much size on, and or you are, well, that means you're risking too much. You're risking too much in a trade that you don't have the conviction in to risk that much for. Which, sounds like you got out okay, but it shouldn't really ever be a problem. As emotional as trading can get, it shouldn't, it shouldn't be a problem. Like, you're buying downside extension. Your game plan is you're giving it more room in case it gets more extended. Further extension equals actually a better even opportunity. You should be buying some and then be down and buying more. Cool as a cucumber, because it's part of your game plan. And there's no emotions with it really, and you're not risking your entire account on this like little trade or whatever. You probably shouldn't ever risk your entire account, and if you are doing it, let me know, because that must be one high conviction trade. So yeah, just if you find yourself that emotional, risk less. You're not gonna be able to trade it right, if you're that emotional with it. As emotional as even I get myself sometimes, which I definitely do. Hey Pat, I shorted Tesla at 10:35 on the inside 5. Market still above. I assume you mean ADMA. Tesla was not. Also looks like weak intraday. You're giving me lots of reasons for your trade. I love it. You're thinking the right way, Rex. Also hanging below yesterday's close, however, above. So you didn't put too much risk on because the daily looks strong, and that's conflicting your idea a bit, which that's great. You're thinking the correct way, 100%. What'd you say? 1035 inside 5. Nice. Nice. Yeah, I like everything about it. I like everything about it. I like that you didn't, if you want me to like really critique you, because I like everything about it honestly, but if you really want me to critique you, then I guess I would say you didn't put as much risk on because the daily chart is strong, which is the exact right way to think of. But therefore, maybe if you are shorting Tesla because you think the market's going down, maybe go and try and find a more relatively weak name to short. Um, Otherwise, if you're shorting Tesla because it got downgraded or there's news or something like that, that's different. I don't know. I like the trade. I like everything about that. But if you really want me to be Mr. Perfect, then I guess that's what I would say. But I like that. All your thought process and everything, that's exactly what I mean with, why finding an entry, why is your entry good, where did it come from, where do you think it can go, why do you think it's going to go there, and if it doesn't work out, why is it going to not work out, you know? Um, if that didn't work out, it's because the market would have ended up holding up earlier than it did. Dollar, VIX would have turned back down, yada yada. I know you can't disclose position sizes, but just to keep with the size question, talk only about dollar and cent amount being risk. I'd like to know if you or anyone else has written down rules for commonly traded stocks and how much you would be risking trying to make. I haven't, but I probably could like just bang it out off the top of my head sometime. Maybe I'll type that out sometime. Um, an example would be SPY. So yeah, it can be tricky too, because like SPY, it depends where the VIX is too, and if the VIX is crazy, SPY, you probably got to risk a point to make multiple points, and then sometimes it can be 50 cents, and sometimes it can be like 25-ish. Yeah, I would say 50 cents probably the smallest, but it can be smaller depending if it's range bound. Anyway, let me finish reading your thing. Uh, 10 cents. AMD 10 cents is yeah a little tight, but I see your point. The word salad. That's a great idea. Um, I would let's start that tomorrow. We'll start a. You know what? I don't know. Maybe I'll try and figure out if there's any compliance issues, but maybe even amongst your guys, you guys can start a Google Doc Excel spreadsheet with a list of names and then just like, just a couple columns, list of names, range you want to trade, and then maybe some criteria for the next column, like, maybe two columns of two different ranges, and then asterisk saying, if VIX is up and market's crazy, use this range. If market's tighter, use this range. If someone wants to start that up, I'll definitely contribute to it for sure. It's a good idea, Dave. I'm happy to make something like that for the team. Hi, Pat. How are you using the 5:15 at a different time frame in a day? Well, you guys see my screen, which I don't. The real screen I use is a different one than this, but it's similar. But I just have four. I have an area on my screen where I have all four up at the same time, um, and it's just in conjunction really with the ADMA, which is why I've said before. As much as I love technical indicators, honestly, all I need is volume and an ADMA and multiple time frames, and I think I'd be fine with that. So yeah, it's just where. Who asked me that? Hemming. It's just where you are compared to where the ADMA is, as well as how the ADMA is sloped. Not just where it is, but also how it's sloped on multiple time frames. So honestly, the low for the market today was kind of the stars aligning as well. You had the VIX divergence, and you had Um, where is this? 15. You had 5-minute downside extension after a big downside move. Big downside move, 5-minute downside extension, 15-minute downside extension, 30 daily. Stars all aligning there for a snapback to possibly come. And then you get the signal kind of with VIX and these tails start coming in and everything like that. But yeah, I hope that makes sense, Hemming. But just I got all four up at the same time. I'm always looking at all four, and it's where you are compared to where the ADMA is on all the time frames, as well as how the ADMA is sloped on those time frames. Which today, like the bounce was crazy today, and it was a process, but it's not. You shouldn't expect that to happen. It's possible because of how extended we are in the daily chart, not extreme extended, but we are extended on the daily, so it was possible, but it's unlikely. You're extended on every single time frame. That bounce is gonna happen, but you're bouncing into a downward 5-minute 8, a downward 15, a downward 30, a downward daily, which we haven't even bounced to the daily one yet. But it's unlikely for a huge bounce and a bounce over them. So that's why you take off most, if not all, into the bounce as well. Yeah, one stock, and they're all linked. So, I click on throughout my level 2s, and you can see all the time frames just change. Same stock, different time frames. Same stock, different time frames. Where's Square at? Square's up now. See, that can be fun but crazy to trade post earnings as well. Maybe if it's a variable amount, then I would be interested in whatever the upper limit is on each stock. Yeah, I like the idea, Dave. I'm down to build something like that out as a team. That's a good idea. There's a lot of things like that I want to type, like I just have in my head, honestly, and I probably should type out, but I haven't yet. But I should, so let's start doing that. Not sure if I covered today's V-shaped recovery. It seemed like SPY bottoms around noon and gradually grinded higher from there on. We're advised not to take on any. Yeah, we were looking for buys down there though midday, but today offered the best. Yeah, what happened? I don't think. Again, what happened today? We were looking and did buy this bottom or around this bottom in this general area. You're never gonna exactly buy the bottom, but you can usually find an area for a bounce. But again, what ended up happening today, I don't think was necessarily likely. Although the VIX is building out divergence on the daily chart. I don't know if you heard me just chat about that earlier, Zahor. But the VVIX made a lower high, and then even like the VIX today. This is the VIX daily chart. The S&P broke yesterday's low, and the VIX didn't even get anywhere close to yesterday's high. Like not even close. So there's a pretty big VIX divergence with the market lows today. So that could have actually helped you give conviction that a bigger bounce could come. But even with that being said, I don't think it was necessarily likely, but if you ended up trailing, you could have caught that whole move and never gotten stopped out. So yeah, the whole like time of day thing. Honestly, for me personally, the only time of day I really don't like trading is the last hour of the day, um, because I find the market's all about the flow of money, and just the last hour of the day, the flow of money can be completely different than it was all day. Um, So you can, I've found myself like you're trying to use the evidence of the intraday chart for the last hour, but then it can just go completely opposite of what you were planning on it doing. Um, so I don't know. The time of day thing, like for me personally, I don't like the last hour, but I'm not gonna not trade just because it's the middle of the day. It's all because the middle of the day thing is also that's kind of like a more of a bull market thing, and you're usually just grindy, and the market's just grindy. I mean, you don't want to be just doing anything, but the market wasn't grindy today. It was kind of going crazy, and it was extended on at in the middle of the day today. Exactly what you're saying, the best risk reward. It was extended on every single time frame, and that's why we were looking for longs there. Um, so yeah, don't get too worked up about the time of day thing. It doesn't really. I don't really. Yeah, I don't think it matters as much. I don't even care. And the weekday thing too. Like, oh, people don't want to take risk on for the weekend. Like, as much as that is kind of true sometimes. Um, turnaround Tuesday or whatever. Like, I don't. That's not really a thing anymore. The computers, they don't know. They don't care what day, what time. Um, they just do. They just do what they do. So, yeah. Um, but yeah, it's definitely not the first midday reversal I've seen. Definitely won't be the last one either. Looks like I got through most questions. Sebastian had a follow up. What about the SPY double inside 5 break at 11? I like that because it's a not only a double inside 5 breakup, but it's happening at a major level. These lows are in front of that 398.50, aka in front of 4,000. So if you're doing it based on that, I like it because otherwise I would say I don't like it because this is a negative Maribozu and most likely this bear flags. But if you're telling me, well, Pat, I know it's a 5 minute Maribozu, but we're at a major daily level, then I would say, you know what, you're right. Um, so I like that, but that was kind of like the last. What time did that happen? Between 10:45 and 11, and between 10:45 and 11, that's when the UUP made a high and then maybe kind of double topped, and it was maybe double topping and maybe rolling over as the S&P was maybe holding 4,000, and then it went to new highs and the S&P lost 4,000. So if you're doing it because it was at that major level, then I like that. Otherwise, I would say I don't like it as much because of that Maribozu that just happened. Any other questions, or you guys good? 5:30 already. I always end up talking a lot during these. Alrighty, well, looks like I got through everything. Crazy day. Hopefully, I was able to shed some light with my ranting. I don't know. I mean, I didn't. Today was okay. Definitely could have made a lot more money holding the SPY and stuff like that. But lessons to be learned every day. More so, even just reminders than lessons. But as crazy as today was, it's not impossible to capitalize on this. Like you know, I'm kind of hardcore, and I definitely like to beat myself up. But like, I don't get mad and say the market was so stupid and the market this and the market that. Like I used to do that for sure, but it's it's your own fault, and I'm pointing at the mirror when I say that. The market is moving points. You could have bought you shorted up here, you're buying down here. Like the market's moving and open this opportunity. So yeah, just gotta keep at it. Anyway, we'll see how they gap us, close above 4,000. Gonna be tricky again tomorrow. Honestly, probably either way how they gap us, it's gonna be a bit tricky because we're not really extended anymore. So we'll see. We'll see what individual names we can find and go from there. Have a good night, everyone. See you tomorrow morning.